Well, hello, ladies and gentlemen. Welcome into a wonderful Monday. I am your lovable, cuddly host, aka Sweet Bobby, aka the Doctor of Bobby Gaines. The Doctor is in the house. Hey, y'all. Well, real traders never trade alone. They trade with their fellow nerds. We got Brandy in the house. She was scalping with us earlier today. And if you want to scalp with us, join our Muscadine Mafia. And we do that most mornings. Of course, a lot of times on Monday mornings, I have a podiatrist appointment to get my foot better. But so we were a little late. But anyway, DB's with us, Dwayne's with us, Hal is with us. Love when Hal's with us. Make the 1-1 great again. Vicky and Matt Jollywally, who hopefully made it back to old Kentucky. Matt, did you make it back to Kentucky? We still got your mama on our prayer request list at church. It says her name and it says friend of Bobby Gaines. So we are praying for your mama. So everybody pray for Matt's mama. She's got cancer and pray she kicks that thing's butt. We really hope she does. All right. So what's happening in the market? Well, ladies and gentlemen, VIX is at 15. The AD is negative 15. We've got the market only down 6 points. AD high 120, AD low negative 102, and it's headed lower now. And oftentimes you can lead, AD will lead price, right? So price has been going up, AD's been going down. Short it, baby, because we think it's going shorter, right? That's kind of the way it works. And then this ES is followed by the NQ, and NQ is a more sporadic version, erratic version of, is erratic a verb, a noun, whatever, an adjective, erratic, and it irrational. It's something. It's a distant cousin of the S&P 500 and does its own thing. But look how often it looks like exactly this. Isn't it amazing? So you've watched AD first, the advances in decline, then you watch the NASDAQ, and you watch the ES, and then this thing normally follows. So right now I would be sitting there going, okay, this is going short, this is going short, this is going long, short the NASDAQ. That's kind of how it works, right? Volume looks pretty good. A little good volume there. Most of those candles are over 2,000. So we know how it looks there. Let's go to our friend volume profile and the big green monster. Been a lot of conversation about the big green monster lately. How does it work? I don't know. A young man by the name of Blake Young come up with this, and it is remarkable how oftentimes it'll show you support and resistance, right? Look at that. We drew this on the 1st of the month, and it is the 18th of the month, and these levels typically mean something. Look at this. Isn't that amazing? So what would I be doing now? Well, price probably wants to test this little area where there's a little vacuum. Nature abhors vacuums, as Hillary Clinton will tell you. And at the same time, it wants to go to this point of control. So you've got these opposing forces that kind of keep it doing this, right? In between those two, which one wins out, we just don't really know. But we do know that price is overbought for the fair value zone below. So if I had to guess in the next 10 days, I would really guess that we're probably going to come in this area and fill some of these gaps right here. That's probably what's going to happen. Let's look at the linear regression. Linear regression still looks bullish, but it does look like it's maybe doing like this before it bounces off, right? To go to the 6,700 or so. But you can see the slope is very, very bullish. Very, very bullish. So we continue in that. Now, y'all, I had a rough day scalping. I was down like 325, and I think it was almost $400 after commissions on Friday. So I had got this thing up to about 16.8. Today, I had a podiatrist appointment this morning, and I only take a few trades, and I'm up $42, and I think I'm done for the day. I just don't like trading after lunch. Number one, I'm sleepy. I need my nap. I need my beauty sleep, for my hourly my daily little nap. And then I wake up and I just don't feel like trading in the afternoons. And then I don't like holding my positions for, you know, because I'm afraid that I'm going to run out of time. And at 4 o'clock, I'm going to have to quit trading and hold something overnight. I just don't want to be in a trade long term. See, even today, I was in a trade for average of 15 minutes, and my longest trade was 20 minutes. I hate having those long trades, but it worked out today. So we're up $42. We'll just take that. I mean, to me, it's just gravy and we're up $1,400 since we started in Trade of Eight. So I'm really good with that. Let's go to our friends over here at Tasty and see how we're doing. I did not put on, after 3 weeks of putting on a trade in SPX. I didn't do one this week. Didn't do one this week. So our theta is at 12. Our Vega is at negative 53. And what we've got on, let's see what we've got on. We don't have an SPX trade. That went off profitable. 3 straight weeks of making $100 in those. Our bill is doing really, really well. And our MES is doing really, really well. Right? We've got a 111. We got a 111. We got a 111. I hate doing this. And then we've got a strangle. And our strangle is up 25% already. And I should have closing orders on the strangle. Let's see our activity. We got working orders. Yeah, we got a working order on the strangle there. And I showed the other day, let me show this again. What we need to do is to get Mark to come in on our daily sessions, because Mark has an account and we're running this in. And back in 2016, I paper traded a strategy that I called the hybrid tastytrade carrying the super trader strategy. Let me just show it with you here. I think I've showed this before, but I want to show it to y'all and show you just kind of what it was. And it basically was, I started out doing something where we did a trade daily. Let me see, where's it at? Hold on a second. Yeah, here we go. So we started out in a $150,000 account, and I started doing a ratio strangle daily. And I think what I was trying to do is to keep a neutral delta, which would be, and I strangled this thing day after day. And it was simple on my profit was I would do close it at 50% or close it when it got down to 21 days, whether it was a profit or a loss. And just look at all these profits here, y'all. Now we had a few losses, huh? But look at this. Time after time after time, we were getting profit after profit after profit after profit. And I eventually started doing these basically one day, every day I'd put on a strangle of some sort, and I would adjust my deltas to basically be delta neutral. So that's kind of what we're doing in an account with Mark. And I'm kind of doing it here in this little account, but I'm not making a trade every day. It's just every now and then I'm doing a trade. And I feel like doing a trade today. All right, let's look at the MES. Let's see what
There is there a good video to watch on that ratio strangle, Bobby?
No, there's not. Because I hadn't done this live before. Uh, but what I was trying to do is keep Murph the deltas pretty delta neutral. Now, what I was really trying to do back then, I did not know about the Sweet Bobby hedge or the Black Swan hedge that we do. So you can tell now, look at this, y'all. Look at this, Murph. The delta is 0 in this account. I am, for all intents and purposes, I am delta neutral now, even though I've got 3, 4 positions on, which is really cool. You would think this is a positive position. This is a positive delta position. This is a positive delta position. This is a neutral position, but my deltas are definitely neutral. My theta is 12 and my Vega is negative 47. What I did back then is I tried to make my deltas twice my Vega. Okay, delta twice my Vega. Why delta twice my Vega? Why, if this was negative 47, I wanted this to be negative 94. So in other words, if the market went down, you would be getting killed on your Vega, but your delta would help overcome the loss in your Vega. But now that I have a hedge, now we don't have one on yet. We don't have a lot of trades on that I think it warrants a hedge. But at some point, we're going to want to hedge this. But right now, I'm trying to keep my deltas as neutral as possible. Just kind of keep it neutral. And I have achieved that, I mean, wildly. Let's look at our count requirement. Yes, I agree with whatever that's saying. And let's look at our MES positions. And we'll go to auto refresh and risk analysis. So let's move this up to points. And let's say that volatility goes to up 40 points. So this says that I have $11,000 worth of exposure in the account if the market goes down 20% and up 40%. And the VIX goes up 40 points, not 40%, but actually 40 points. So I've got $11,000 of exposure to the downside. So I am kind of getting to a point to where I need a little bit of a hedge to the downside, but I think I'm going to hold off right now. But I think I blocked the idea of when you put on a daily trade, market or market direction becomes irrelevant. It's because if the market's down here, then I'll split it there. If market goes up here, I'll put a trade here, put a trade there. Market goes down here, I'll put one here, there. So I've always got a strangle or an iron condor across what my position is. We're only using 28% of our buying power. Let's make sure we're not paying any margin interest. Click on this balance here. That stayed the same. So you want to make sure that your cash and your settled cash are positive, right? So that you're not paying margin interest. That says pending margin interest, but this has been 30 at 489 for a while, so I'm not paying any margin interest, any additional margin interest. But I think I would like to put in a little strangle today. We got one strangle here, doing really good. We're going to take it off at 50%. So let's go and let's do a little daily strangle today. So let's go curve table. Let's go to trade. Where is my, hold on a second. No options are available for this symbol. MES. Maybe it's the Z5 that doesn't have any options. Let's see. / MES.
Bobby, how does this do in a just a grind up market?
Well, you're going to be tested on those
So
calls at
calls.
some point. Yeah. But I think it does okay. I think you'll find you're going to be okay because we kind of go up with the market. And what we'll do, Matt, is this. Let's do a little reminder lesson here. Where's my pen at? Hold on a second, y'all. Let me get my pen up here. So what we're doing, you'll like this. So as the market goes up, oh, that thing is backwards. Hold on a second. QE on. Let me fix this thing. QE on, tap it. Let's do this as a reminder. What happens when the market goes up, y'all? What happens to your deltas? Anyone remember?
Depends on, like, are you talking about a short call or short put?
Well, just if I've got a strangle on. Hold on a second. Let me see what this does. 0, 1, custom area, 180. Now, let's see if this works. No, it doesn't. Let's see. Okay,
That
what
they
happens?
increase short delta on the call side and they decrease long delta on the short put.
So overall, what happens to your delta?
I guess they just neutralize. They washed out.
It goes down. It goes
Okay.
down. So you reduce your delta. Your long delta gets shorter, and your short deltas get more short. So the thing actually, let's see if this thing. Oh, there it goes. So your deltas get shorter. So let's say that again, y'all. If the market goes up and I've got strangles on, my deltas get shorter. Okay. Now, as my deltas get shorter, and remember, Matt, I want to do delta neutral. Well, all of a sudden, my delta's getting short. What do? I start selling puts or put spreads. So this should do well when the market goes up, because the market goes up, my deltas are getting shorter. What will I do to combat that? I will be putting on short put positions or short put spreads. Now that doesn't make sense, because if you remember Karen, the super trader, she would sell puts on down days and she'd sell calls on up days. Well, that's fine. That's fine too, but I am doing it from the portfolio level, and we want to keep this as close to zero or even negative a little bit to handle a hit, right? We want to be able to say that we're doing a hit. So technically, if I didn't have a hedge today, I would probably do a ratio strangle to get my deltas negative. So what I would do is I would sell one put and two calls and manage that trade at 50% profit or 2x loser. And what we're basically doing is allowing theta to do what it does, the decay. And as in Mark's case with his portfolio, he's running this in a $400,000 portfolio. So we're doing a trade basically every day. Today he put on an iron condor in SPX, and his deltas are pretty much delta neutral. Now, what is delta neutral? I define delta neutral as now this is my thing. This isn't tastytrade. 0.0015 times your net lig. So if you've got $100,000 account, you can be negative 150 deltas and be delta neutral, or plus 150 deltas and be delta neutral. Anything in between that. If you're above that, then, or that number is greater than 150, then you're not delta neutral anymore. And what your goal is on your daily trade is to make sure that you are moving toward delta neutrality. I don't have to have it delta neutral today if I'm out of line, but I want to be moving toward that on a daily basis. Isn't that kind of cool? So let's do a little strangle today. Okay. Let's do a strangle.
So you're going to run this in the micros?
Yeah, I'm gonna run this in the micros on this account, and I can add some money to this account if I need to, but we're gonna run it in the micros. So we like tastytrade mechanics on this, right? So you see I've got trades from 95, 74, 60, 43 days. So let's just go here. Let's go 43 days. And let's do about a 20 delta. There's a 21, 62.50. We'll sell that, and let's go to about a 20 delta over here. There's a 19% or a 17. That's a 20 delta or 23%. Let's do this one a little closer. And remember, the reason why I would move my call in a little bit is I'd like to have a little bit of negative delta if we can. I'm not sure this is going to give us because of the skew, but that'll bring us in 68.75, right, in the MES. that gives us a 54% probability of profit. We don't like that necessarily, right? Make sure that's 20 delta again, 20 delta again. Brings in about $10 a theta, max profit 343. Let's run it. We could let it go, but let's see. Here it is, 68, 62. Let's replace. Get a little less credit for it. That should fill. I said that should fill. Don't embarrass me in front of my friends. We'll go down one more. There we feel. And so then what we'll do is we'll go back to positions. We've got this little position here. And we'll call this Strangle 2. Group position. I see a group positions. Strangle 2.
I guess you could also scale this to any size account
Yeah, you could do
from
this
one a day to one a week or
one a month,
one every
whatever.
10 days.
Right, exactly. Yeah, you just, and this one, I'm not doing one every day, but I'm doing one every few days. So it looks like that kept my delta neutral again. My theta is up to 22. My Vegas negative 111. I got $491 of extrinsic value. I'm using 31% of my buying power. Let's right click on this. Let's close position at 50%. So that's $34. Let's move that to good till cancel. There. And so now our delta is 1. If my delta gets too high, I'll sell calls or ratio strangle with more calls and puts. If I get too many negative deltas, I'll sell ratio put, more on the put side than the call. And we'll just let this kind of work out. So that's the plan. Any questions? All right. Y'all have a good rest of your day. Thanks for joining me, and I will see y'all tomorrow.